heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, PC sales, they're stalling, causing Dell to fall following its third quarter earnings. We'll break it all down. Plus, SoftBank wants to boost its stake in OpenAI, looking to buy up to $1.5 billion in shares from the startup's employees. And Wicked and Gladiator II have kicked off what's likely to be a strong holiday season for cinemas. We bring you the content to consume this Thanksgiving, but first, we check on these markets. And we've got some good news being bad news. Basically, we've got a strong set of data in the economy. We've still got PCE, that gauge of consumer price points that the Fed so looks at, coming in where we expected, 2.8% growth. But that is still strong, and maybe we get a more cautious Fed into a rate-cutting cycle. Maybe we don't cut at the anticipated rate, so we see a sell-off in the markets, as perhaps that's the changing of the guard with the Federal Reserve view. We're off by 1.1%. Big tech sells off the most. Nvidia, for example, down by more than 3%. But not just from a points perspective. What leads us lower on the S&P is some of the earnings that we got. Let's just look at what's happening on the likes of Dell, HP, both of them key drags on the S&P 500 today. I'm looking at HP off by 13% almost, let's call it. Dell off by 12%. Both of these signifying that recovery in PC demand just isn't really happening at the pace that we were anticipating. We've also got some AI to weave into all of this. We can do it at Bloomberg's Brody Ford. Brody, let's start with Dell, because this is a company that not only is focusing in on the AI server perspective, but this is all about PC and hardware and a recovery that just isn't happening.
Yeah, I am speaking to you currently on a laptop that I bought in summer 2020. And I'm still happy with it, right? I mean, they want me to buy a new one. I get advertisements all the time, but I'm still sticking with this laptop that's pushing 5 years old. And the data shows that I'm not alone. It seems like a lot of businesses and consumers bought these laptops in the early days of the pandemic. And you know, for a while now, the HPs and Dells of the world have said the PC market recovery is just a quarter or two out. It's coming. People are going to buy new computers. It's time. And as we've seen in these earnings, it just keeps getting pushed out as folks, you know, they're tight on their budgets. They're spending money elsewhere, and they're still happy with that hardware they got, you know, a couple of years ago.
All eyes on the forecast being a little bit weaker than anticipated. Keeping it quick for us, Brody Ford. We really appreciate that roundup of numbers. We've got more earnings to report to go through, of course. CrowdStrike, having a look at shares off by 4.5%. We can detail this with Margie Murphy, joining us on the fact that, boy, we go back to the summer. We go to the impact on Microsoft. We think about the offline implications of CrowdStrike. Have they recovered?
Right, yeah. So July 19th, we had this global tech outage after CrowdStrike pushed out a software update impacting devices using Windows operating systems. It looks like, you know, it was their second report since this glitch, and it looks like sales haven't been hit by it. However, shares dropped when investors read about the estimates for the earnings per share in these for the next earnings report. So that's 84 cents to 86 cents when the analysts were expecting 87 cents, which suggests that they're not out of the woods quite yet and the headwinds could continue.
Talk to us a little bit about a $32 million deal with Carahsoft in particular, and whether or not we're getting deals pushed out or cancelled, or any rethinking ultimately on demand for products coming from CrowdStrike.
Yeah, the company did refer to this deal in this earnings report, but currently they seem very focused on talking about their products to come in terms of AI and updates there. In terms of deals with the government, they were pretty tight-lipped on that, so more to see with that.
It must be noted that third quarter revenue did actually come in better than expected. Margie Murphy on the breakdown of what happened with CrowdStrike. More earnings, tech more broadly. Let's talk about all of it. Anjali Bastien-Pillai is with us. Pictet Asset Management. It is wonderful to have some time with you, Anjali. And just we're trying to understand whether this whole exuberance around generative AI, whether the desire to get into the infrastructure really is implicating your or my demand for PC, your or my demand for new protection and cybersecurity that involves generative AI. Is it being translated yet?
Yeah, it's quite interesting. I think there's a huge expectation, obviously, on generative AI. It's been 2 years now. We're in November 2024 now since the launch of ChatGPT. I think what's interesting is that the build-out is creating a lot of demand for all sorts of new technologies. I think you mentioned the PC, the smartphones. I think clearly HBM, high bandwidth memory, nobody would have expected that demand to be so high even a year ago. I think that trickles down to PC, smartphones, of course, lackluster numbers today. But at the same time, when you think about AI on the edge and what can come around any smartphone, including obviously the iPhone 17, which is already expected to increase their memory by at least 50% for the next round of innovation. So I think AI on the edge, HBM, high bandwidth memory, famous Moore's law now also embedding, a lot more memory in order to run generative AI. I think that build out is creating a lot of demand for obviously different technologies from semiconductor design all the way to semiconductor software, but also to the actual equipment makers who also now see sort of demand for this advanced packaging that I mentioned earlier. Yeah. So I think where we are is also an S-curve. So the infrastructure build out obviously very important, but even in the second, third phase, there's some very interesting, investments that we see, and software now starting to embed more and more generative AI. I mean, you mentioned CrowdStrike earlier. I think that's a great example where there's a talent shortage where Gen AI can actually help you. CrowdStrike has a product called Charlotte AI, so that it helps you also find problems or data-driven information can be used within generative AI as well within the products that they sell, and that's quite interesting there as well.
Anjali, the question though for many is there's interesting S-curves, there's interesting opportunities. You talk about the whole bandwidth where you could be allocating money, but are the valuations already reflecting the optimism that we get AI at the edge and we all start adopting it?
So I think on valuations, it's an interesting sort of dilemma, I think, right now. I think there's a lot going on in terms of the, obviously, profitability, revenues that you see today, and probably justifies a lot of it. But I think moving forward to a bigger, pool of potential investments opportunities beyond the tech stocks, if you want, or the information technology stocks, I think you see a lot of other areas which are not necessarily related to IT, which can have very, obviously interesting valuations, but also interesting opportunities. Right. So when you look through beyond an index or beyond a handful of stocks, I think there can be some very interesting opportunities there where the valuations may not be as high, and also the potential also remains still very, very strong because
Give us some examples there, Anjali. Are you talking about energy opportunities? Are you talking about other spaces within software that, for example, hasn't already been priced in like a Palantir?
Mm-hmm. So I think we look at everything from, like I mentioned, some of the equipment makers, which play a big role, and the whole U.S. reshoring, nearshoring. I mean, there's huge subsidies out there and huge sort of investments that are already out there for a huge number of these new build-outs of semiconductor factories.
So Intel, you're saying, and even a TSMC in this geopolitical environment?
So if you take under the reshoring, sort of nearshoring sort of examples, if you take Micron, TSMC, Intel, Samsung, you have more than 325 billion of all the, sort of expenses out there in terms of building out these brand new factories. So I think that means that you're going to embed a lot of new equipment within those factories, and then obviously a lot of other softwares and even industrial robotics within those factories, because these chips sometimes are so heavy, you need robotics arms to carry them. So those are the sort of examples where you can look beyond sort of, some of the obvious IT stocks that very often would fall into that category of valuations being a bit tricky.
Your CV is so fascinating because, like me, you sort of started focusing in on the bond market, credit, and then you've really dived into some niche areas that everyone's now interested in: digitalization, robotics, as you say, security. Where are we going to see, for example, the robotics reimagining come in? Where is it? US-based companies? Is it global?
It's interesting. I think on the robotics side, you can look at everything from actual industrial robotics, so factory arms that help you build semiconductor chips or EV cars, etc. But the automation behind robotics is quite interesting in terms of expanding through software, through all these data-driven decisions, both for industrial and for enterprise. Actually, there's a very interesting chart that I often use about the growth since 2021 to 2030 about the semiconductor industry, and you will see the growth rate is actually quite interesting in the automotive and the industrial sector. And that's also obviously driving a lot of M&A. Recently, Siemens acquiring Altair, or even Synopsys acquiring Ansys. There's a lot of M&A in that space because the hardware, if you want, is supplemented more and more with the software, but also the data-driven decisions. I think that in the field of robotics will be quite interesting going forward.
Anjali, great to have some time with you. Come back.
Thank you.
Anjali Bastian-Pillai of Pictet Asset Management. Meanwhile, coming up, we're going to be joined by the CEO of Nutanix on the company's earnings results. His thoughts on trends in enterprise spending in generative AI. This is Bloomberg Technology. Infrastructure software company Nutanix reported first quarter results, fiscal first quarter, and gave an outlook seen as pretty positive by analysts. Shares, though, coming off of their highs on the day, we're now trading lower. Let's talk about it with the Nutanix CEO, Rajiv Ramaswamy, joining us now. And people feeling that perhaps you had good set of growth, but cautious outlook here, particularly when it comes to federal spending. Can you just talk us through some of that caution?
Yes, thank you, Carolyn. Great to be on here. We had a good quarter. We exceeded all our guided metrics, and we also were able to raise our guide for Q2. But we felt it prudent to keep our revenue guide for the full year the same, all while we raised our free cash flow guide. Now, this quarter, we had a relatively weak federal business. It's usually the peak business for Fed, given it's their year end. We expect Fed spending to return to normal levels more or less in Q2, but then we have a new administration coming on board in January. And we don't exactly know what's going to happen, but we have to adapt to whatever may happen with the new administration. And so we're being a bit cautious about the Fed overall for the rest of the year, and it's one of the reasons why we kept our full year revenue outlook the same.
We can see over the last 3 months your shares have done well, up some 30%. Morgan Stanley was putting it out there that they feel technology spend is more immune to perhaps the belt tightening we're going to see more broadly with the new administration. Do you feel that sort of viewpoint? Does usually you ride out any cutbacks?
Yeah, I think fundamentally, when I look at every company, including governments and organizations, are becoming software entities more and more because they rely on applications and data to drive their businesses more so than ever. And so from that perspective, they have to make the right investments in technology, especially software. So I look at it and say there's an overall macro situation, and within that situation, tech spend will probably do slightly better than whatever you see in macro. And within that, software spending is probably going to be better, right, as they have to invest in these key initiatives. Now, all that said, though, we've talked for several quarters about how people are being very careful about making sure they get the benefit for what they spend, looking at the return on investment, looking at the total cost of ownership benefits. And that's one of the things that we very much provide as a company when customers pick us to run their applications and data.
And that's been the selling point of hyper-converged infrastructure more broadly, because you're doing the storage, the computing, the networks all together. I'm interested, Rajiv, though, with that comes some supply chain headaches that you've suffered in the past. I go back a few years and you were very well versed at talking us through macro headwinds. When you're looking at geopolitics as it is, do you have any worries about your own supply chain, about access to certain hardware, for example?
Yeah, first of all, to be clear, we are a software company, but customers run our software on hardware. So their access to hardware is important for them to run our software, right? And that's the indirect dependency that we have on the supply chain. Now, what we've done on our front is we've provided a lot of diversity and choice for our customers. They can pick their choice of server vendors across the spectrum, pretty much any server vendor, and run our software on it. So that helps them diversify a bit from any supply chain shortages that might come on board because they do have this broad choice. And so as a software company, that's what we try and do. We try and provide that flexibility and freedom of choice so that our customers can conduct their business.
And you've been building out partnerships. Look, it's interesting that on the same day as your numbers, we digest Dell, of course, big in server, AI servers, and good growth there for them. Perhaps the market got ahead of that growth. I'm interested as to how the market's digesting your own generative AI focus.
Yeah, for us, our generative focus, AI focus is pretty early. If you look at AI overall in the market, a lot of the money has been spent on training large language models in massive compute clusters driven by a relatively small number of high spenders. The vast majority of enterprises and government organizations, these are our customers. There's 100,000 of them around plus around the world. Today we have about 26,000 of them as our customers. They are still in the early stages of deploying and adopting generative AI. Most of them are, first of all, going to be consuming these models that are pre-trained, and they're going to be using it for inferencing, fine-tuning, RAG, and inferencing, so that they can get real productivity gains. For example, improve the productivity of their developers, improve their customer support, get better means to do fraud detection, as an example. These are some of the applications that companies around the world and organizations are trying to build. We provide a simple platform that provides a turnkey way for them to build and deploy those generative AI inferencing applications. And so that market is still early. Most companies are at this point incubating these applications. We've seen some go to production. I do think 2025 and 2026 are going to be big years as companies take those applications to production.
Still waiting. Rajiv Ramaswamy, it's great to have some time with you. Nutanix CEO there. Jamieson Greer, who is President-elect Donald Trump's pick for the top trade position, sees China as a, quote, generational challenge to the United States, has advocated for a strategic decoupling from the country, and he's actually already played a pretty key role in imposing tariffs on China during Trump's first term. Let's get to grips with it from a tech perspective with Bloomberg's Mike Shepard in DC. Mike, look, we once again are just getting the feeling that anyone with exposure to China supply chain or demand is going to having a tough time.
That's right, Caroline. And the selection of Jamieson Greer, as you noted, really signals a direction of travel for this incoming administration that may be hard for companies to avoid. There have been some hope that the naming of Scott Bessent, for example, as the incoming Treasury Secretary could mean that Trump might temper his desire to impose tariffs of as much as 60% on Chinese goods, the way he had promised on the campaign trail. But picking Jamieson Greer for this key trade position, which will negotiate and elaborate U.S. trade policy, suggests otherwise, very much so. And when we talk about this strategic decoupling, Greer has left us a few clues and about what that means and how he could pursue it. For one, he has floated the idea of revoking China's permanent normal trade relations status. And this is one that was granted to Beijing back in 2000 when China was trying to enter the World Trade Organization. That would put China back on the same footing as Russia, Cuba, and North Korea. And it would subject Chinese goods to a range of tariffs that are exempted from right now. Right. The other thing he has talked about doing is expanding export controls of the kind that we've seen the Biden administration impose on a range of tech products. And all of this has huge ramifications for companies like Apple and Intel and even venture investors.
Well, precisely. I'm Tim Cook. I'm sat there reading this hypothesis and this generational challenge. Am I going to sit there confidently that I'm going to get some exemption, that I'm a carve-out?
If you're Tim Cook, you already know Donald Trump pretty well from his first term in office, and you will remember the experience that you went through as he imposed tariffs on goods coming in from China, and he knows that he will need to intercede and intervene pretty quickly and very personally with the president. Donald Trump is somebody who likes to engage with CEOs and businesses and is willing to hear them out, but the time to act is sooner rather than later. So you can expect that top executives will be trying to get Donald Trump's ear and even also talk to Jamieson Greer and other top economic officials like Scott Bessent, the incoming Treasury chief, and then also the person he designated as his National Economic Council director, and that is Kevin Hassett, whom he named last night.
Another person recognized from the first administration, Mike Shepard. Thank you so much. Look, talking of one key CEO who has Trump's ear, let's get to today's Tech Daily, written by Bloomberg's Kurt Wagner, who says Elon Musk is about to Twitterize the US government in his new official role as the head of the Department of Government Efficiency, an unofficial Trump-anointed group tasked with identifying some $2 trillion in spending cuts. Kurt joins us now. Look, we can debate whether $2 trillion is ever really a reality or a figure that can be attained, but boy, we can kind of sense what's coming from what happened to Twitter, now X.
Yeah, we've been here before, right? 2 years ago, we were watching him basically go into another institution, in this case Twitter, and gut the company, right? And we're seeing a lot of the same strategies come forward already in this sort of first couple weeks of the Department of Government Efficiency. So, he said he's going to eliminate work from home. He's going to have, dramatic cost cuts on headcount for people. We know that he's going to do things at 1,000,000 miles per hour. That's what Elon Musk does with everything. And I think the point of this kind of column this morning was to remind people that when he did that at Twitter, he did succeed in the sense that Twitter still operates on a much smaller budget than it did before, but he broke a lot of things along the way.
He broke, and therefore maybe you make the point, this might not be healthy. It might be achievable, it might be doable, but is it healthy? And look, one social media platform versus the US government functioning is a very different thing.
Right, and it's not a perfect apples-to-apples comparison, but I think what we saw from the Twitter example was that he was very comfortable just saying, we're going to do these cuts, we're going to do them as fast as possible, and then we'll go back and fix things afterwards. I don't think it's going to be that simple, of course, when you do this at the size and scale of the U.S. government. Right. And so my hope, of course, as a citizen here of the U.S. is that he's a little bit more thoughtful here and that he doesn't just slash and burn and then try to go back and fix those mistakes later on, because that might not be possible in the government situation in the same way that, he tried to do with Twitter.
It's a great read. Go check out the Tech Daily today, authored by Kurt Wagner. Thank you so much. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's just talk about crypto and, the future of it at the moment with the US CFTC, the relatively underfunded regulator that's been overshadowed by the SEC, now a path to prominence if the incoming Trump administration really revamps crypto policy and installs an industry-leaning chair. Republicans controlling Congress and the White House, the agency's jurisdiction might actually expand dramatically, including to major tokens such as Bitcoin and ETH. Let's bring in Bill Harris, more around how you should be thinking about crypto and your wealth within it. Founding CEO of Evergreen Wealth, but you're also former CEO of PayPal, of Intuit. You'll understand how to build businesses. I'm interested when you're looking at the regulatory overview, when you're looking at everyone suddenly probably calling you up, wanting to know how their investments in crypto are looking and how they should make the most of them. Do you make changes ahead of an administration change?
Yes, of course. What you do is you try to anticipate where it's going. And in my particular arena, financial services and particularly financial technology, there is likely to be a significant reduction in the regulatory burden for particularly people who are working with new assets such as crypto.
Of course, PayPal has been making inroads into that space. They've been adopting and offering it far more. Do you think this will become a much more ubiquitous asset class more broadly?
Well, certainly as it starts to show up in ETFs and things like that, the answer is yes. In terms of actual holding, I don't think so, because most of the people who want to hold it directly are already working through exchanges.
And when you're thinking, before I get onto what everyone's asking you about how to hold crypto and how to make it most beneficial, I want to know, with your hat on of having led businesses such as Intuit and PayPal, how do you start talking to people in government at this moment? How do you start discussing it with your employee base, how things might look more uncertain going into the new year?
In terms of talking to government, it's really important as they're coming in to try to make contacts with people that are likely to be in decision-making positions, particularly in my case for financial services. With the employees, There's not a whole lot to say, particularly because in our particular business, and we focus on investment taxes, amongst other things, it is likely to be more of the same rather than big changes. And the reason being, the real unknown has for a long time been whether the Tax Cut and Jobs Act would be extended at the end of 2025. It's now clear that it will be extended. What's the impact? The impact is there will be no changes in many of the aspects of the investment tax arena.
Okay, so let's talk about wealth built up during the course of 2024. Markets have done well. Crypto has exploded. I'm sat on a whole load of increased value.
Yes.
What does one do? Does one therefore sell out if it's that sort of a fund that they've been getting into? We're not talking about your 401k. We're not talking about put it away. We're talking about people who've been trading this.
It's a very difficult thing from a tax point of view. Crypto's kind of a mess because it is not treated like currency from the tax point of view. It's treated as property, and that means it's taxed the same way that most securities are. And so you've got capital gain. Capital gain is the best kind of income to be taxed on. First of all, it's lower tax rate than ordinary income, but it's also then, there are many things you can do about the timing of recognizing capital gain. If you don't do that, if you don't think about the timing, then you're going to be hit by anything from 20% to 35% capital gains tax when you sell at a gain. There are some really terrific things you can do to reduce, offset, defer, or even eliminate that capital gains tax, but you have to be smart about it.
Yeah, we're talking about tax efficiency here, not tax avoidance. What is efficient, particularly if you're thinking it's time of year I'm going to be a giving kind of a person? There's a lot of charitable giving you can do by using and locking in those gains.
Yes. Both charitable giving and family gifting, both of those are ways you can eliminate the capital gains that you would otherwise pay. If you're going to do a charitable deduction, or if you're a charitable donation, the best way to do it is with a donor-advised fund, a DAF. And the reason is this. First of all, there are two benefits for giving to charity. Number one, you do not pay any unrealized capital gains. You never pay tax on that unrealized gain. In addition, if you itemize, you also get a charitable deduction. So it's a twofer. It can be great. What's the problem? There are not many charities that are even able to contemplate taking crypto. And you have to pass it as crypto. You can't yourself turn it to fiat and then pass it, because then the gain is yours. But donor-advised funds allows you to put the crypto into the fund. You can take the tax exemption this tax year, and then you can decide when you want to donate and to whom, anytime you like, for the next indefinite period of time.
Look, you're someone who is trying to make building wealth as technologically advanced and forward-thinking as possible. You've already run businesses that have been at the forefront of fintech, as you say, and just digital adoption. How do your consumers feel right now? How do you feel as a business leader about confidence in building within the US economy and whether or not it's fit for purpose for your particular business?
I believe in the U.S. economy, always have, always will. What's the big challenge? The big challenge, of course, is tariffs. Because most economists who look at that, as you well know, say this is likely to accelerate inflation rates. And inflation rates do a whole lot, and particularly from the point of view of then driving interest rates, which directly impacts any investor with significant assets.
One for the customers you now have, and one for many of you that's watching. Bill Harris is CEO of Evergreen Wealth, but of course was helping lead Intuit and PayPal previously. Now it's time for Talking Tech. First up, Black Forest Labs, the German AI startup that helps Elon Musk's Grok produce images, is in talks to raise as much as $200 million from investors, which include Andreessen Horowitz. All this less than just 4 months after it launched. Plus, Delivery Hero boosted the public listing size of Talabat, its Middle Eastern unit, to as much as $2 billion. The deal is on track to be the United Arab Emirates' biggest listing of the year. And Apple is missing out on the big 2024 smartphone market rebound. That's according to market tracker IDC. That actually says Apple barely managed growth even as global smartphone sales rebounded strongly after 2 years of decline. Still, Apple remains by far the profit leader over its Android rivals. Let's just dovetail into what's happening on the markets right now, because we have seen more broadly the Nasdaq under pressure, some concerns about economic data being pretty strong. We also want to shine a light on one particular company that's been on the downside for the Nasdaq as well. We're off by 1.1% on the Nasdaq 100. Nvidia is your biggest points contributor there that drags us lower as we worry about inflationary pressure stopping the Fed cutting as many as anticipated. But Symbotic, look, here's another example of a company having issues with auditing and reporting. Cutting its outlook going forward, accounting errors is what they're currently saying, and so they can't file their 10K on time. We're off by, as you'll see, 40% over the last 2 trading days. And they're really worrying about the revenue forecast going forward. They're lowering the revenue expectations to $480 to $500 million. What's interesting is this company went public via SPAC, a SoftBank-backed SPAC, and indeed SoftBank's Vision Fund had flipped this particular company of late. But we're looking more at SoftBank as well. The company is aiming to increase its stake in OpenAI, for example, acquiring up to $1.5 billion in shares from the startup's employees, according to sources. Mark Bergen joins us now. And Mark, SoftBank's always active. They're particularly active in the area of artificial intelligence. And how are they going to access this money?
Yeah, this has actually they've been relatively quiet after that big spurt we saw from, like, say, 2017, 2021. They are now all in. Masa's son, from our reporting, wanted to invest a lot more in the most recent OpenAI round. They were kind of limited to $500 million. So now they've had this arrangement where they're able to, there's a secondary share sale from OpenAI employees that'll free up to $1.5 billion and give Masa his opportunity to get into this transformational company. He's
already put some money to work in the recent round, but $1.5 billion, that's a lot of employees selling. Are we thinking that they'll meet that mark?
My expectation is that OpenAI probably did a lot of the math beforehand and is pretty confident to do that. I mean, I'd be curious to see if some employees hold on to it, expecting that they'll be able to make more later on. This is something I believe Sam Altman has talked about is doing these with regularity. Something where we've seen companies like Stripe that have stayed public for a very extended amount of time. Don't expect OpenAI to IPO next year, and so this is probably the best path for them as far as an employee retention plan.
Well said, Mark Bergen. Thank you on the latest when it comes to SoftBank and OpenAI. Meanwhile, coming up, a little bit more in the venture space, 776, shooting for the moon. The company's founding partner, Caitlin Holloway, joins us on their space investments. That's next. This is Bloomberg Technology. Major companies like SpaceX and Blue Origin are helping usher in a new wave of mainstream space exploration. But they're not the only firms that are searching for answers in the sky. That's why 776 has already made investments in other space companies. Take Stoke, Interloon, Astroforge. Let's talk through them with Caitlin Holloway, founding partner of 776. And look, we're not just talking about reusable rockets here. We're talking about mining resources out in space or on asteroids even. How do you get to visualize from a founder that they can build a totally new ecosystem?
That is such a good question. And, I think that my background in building high growth companies for, the last almost nearly 15, 20 years here has really helped me to better understand, despite not being a rocket scientist myself, what it really takes to build into the future and look to the stars and really see a future for humanity that most of us cannot. And so understanding what it takes to be a great founder, whether you're building, a chocolate bar or a reusable rocket, there are some pretty standard things that make a founder fantastic.
What makes the business opportunity, or at least the valuation, fantastic? Because you are taking such, bigger scale risk in a way of whether or not one can mine in space rather than build a chocolate bar here on Earth.
Right. Well, I think that's something that's really interesting about the economy and the times that we're living in today. Even 5 years ago, I think that this was far too speculative for early stage companies, early stage VC firms to be investing in these companies at the earliest stages. And so, with SpaceX and Blue Origin, who have been really charting the path from the private sector so publicly, it really has allowed us to better understand where the technology is today. And I think for so long, the government, between NASA and then other scientists who really have been building behind that cloak, behind the curtain, all of that technology is finally coming to the forefront. And so for us now, that technology is table stakes. The infrastructure is here. And so to place a bet on the table with the expectation that we might see history be made and some returns come back within the next 10 years is not unreasonable at all.
In many ways, SpaceX has been sucking up all the oxygen in the room, and many anticipate that with Elon's very close relationship with the Trump administration, there might be help from a regulatory perspective, but will that help Stoke as well as the likes of SpaceX?
Yeah, well, I think the beautiful thing about being a startup is that you are much more agile, you are much more nimble, and these founders are not scared of taking really big swings. That's the beauty of being an early stage founder. And it's the luxury, frankly, that SpaceX doesn't have anymore. And so while they have paved the way for, all of the obvious reasons, but really it's the youngest companies that are building now that are going to take advantage of that technology and really build things that, again, when I look at the night sky with my little boys, it's going to look much different for them. And whether that's Astroforge or Stoke or Interloon, they're going to be the reason why.
Is there as much committed capital to other areas? For example, I'm thinking about you deploy money across Web3, across AI, across climate tech in many ways. When you're looking at valuation of an AI company versus a space one, how competitive is it now?
It's really interesting. Obviously, VC loves a good trend and a good hype cycle. But I really do think that while many VCs are looking to AI for the obvious reasons, they're also looking to deep tech in a way that they haven't before. And I think an interesting trend is that you're seeing young generalist funds really come in and sit side by side on cap tables with the expectation of some of these larger multi-stage firms coming in and carrying them through to the finish line. But I really do think that this is the moment. And again, when you see a generalist start getting involved in deep tech, I think that means that there's something more than a trend happening.
What are you seeing in terms of future fundraising opportunities as to whether the companies that you give a seed or very early stage investment to are being able to raise further rounds? You're managing to see the increase in the value of your fund that you've helped build.
Absolutely. I think that this is where the power of selection really comes into play. My partner, Alexis Ohanian, has quite the track record himself, but really understanding, again, where that people component meets the product. And so for us, early stage investing, there is a power law at play, of course, but the expectation is that we will see these companies move on. If we're investing in the very best founders, we have no doubt that they're going to be able to pick up those later rounds and really take it all the way.
Kaylin Holloway, thanks for coming on. Keep coming back as those portfolio companies do raise more rounds. 776, we appreciate it. Black Friday. It isn't just for clothing or electronics deals. Streaming services, they're on sale too. And that could help customers escape perhaps some recent increases in subscription prices. Bloomberg's Hannah Miller is here with more. And what's so interesting is you document basically all the deals that are available across the multitude of streamers we all have. It feels as though the deals are on the ones where you get ads.
Yes, most of these are for ad-supported versions of these streaming services, with an exception here or there. But yeah, if you want these deals, you're going to have to watch ads.
And why are we finding that these streaming companies are wanting to promote that element, this new area where they're able to make ad dollars as well?
Yeah, I mean, we've seen a lot of legacy media companies really zero in on streaming and kind of pull away from traditional cable. They want more subscribers to these streaming services, and this is a way to get people in.
Looking at some of the story that you have and the discount prices, I mean, Hulu with ads is just 99 cents per month, down from $9.99 per month. And we see the Max, $2.99, for example. Have we seen this repeat? Is this something that they've drawn on in previous years?
Yeah, Hulu's actually been a pioneer in having these Black Friday deals, and we've seen other streamers jump on the bandwagon. To keep in mind with these deals, a lot of them are short term. They're for a year at most. So, those savings only go so far.
and how easy is then to exit it? Like, how much are they under duress to make sure that everything's very transparent?
You know, if you try to cancel, they'll often offer a little sweetener to keep you back on board. So it's not the worst process in the world, but it can be a bit arduous.
It's a great read if you want to be getting in on some of your Black Friday savings across streaming deals. We appreciate it. That's Hannah Miller on all things Black Friday for streaming. Let's go from the small screen to the big screen now, because after movie delays from last year's Hollywood strikes, movie theater hype is surging on the back of a few recent blockbusters. Just take Wicked, for example, or Gladiator II, which have just brought in a combined $168 million in sales. That's across US and Canadian theaters in the past weekend alone. The domestic box office could reach up to $370 million over a 5-day holiday period that's coming up. This is based on Bloomberg Intelligence analysis of industry forecasts. The person who's been cracking those numbers is Kevin Neer from Bloomberg Intelligence. So it's this time of year, it's a consumer sentiment thing, or actually it's these particular movies that are drawing everyone in?
I think it's both, Caroline. I think it's both. I think there's a great flux of just a perfect storm right now. I mean, these three films, they're getting a lot of buzz. They're being received very well by critics, by audiences, and that's after a few different misfires, right? So cinemas certainly are happy. The studios are certainly happy, as you just said. Some of the more bullish estimates are putting the total haul for this 5-day period could be north of $300, maybe even $350 million.
These are not cheap movies to have made, though. So these ones needed to be blockbusters, right?
Correct. Now, by no stretch were they cheap films. And then you factor in the marketing campaigns as well. We saw some incredible marketing spend for Wicked. I'm sure you saw ads everywhere.
Dolls everywhere, everything everywhere.
Everywhere. So they got to see a return on that. And really that kicks off that content value flywheel. Starts with the theater, right? And then you see that carry on. We were just talking about streaming services. So really that theatrical runway can really accelerate that flywheel.
My family, a little bit too young for the Wicked side of things. Husband's already done Gladiator II. But we are interested in Moana too.
Yeah.
Now, how big a deal is that going to be for Disney and Disney streaming? How are they giving that to the public?
Yeah, well, we're starting to get a little bit of numbers in. Moana 2 had a great preview last night, a record for a Walt Disney animated film, which is really nice to see. And I think it does complement the Wicked audience. As you said, you kind of are getting the female demographic, but you're getting different ages there. So really, it's looking great for cinemas. And Disney specifically, the studio's had such a wonderful bounce back this year after a few misfires in 2023. I mean, they're only putting out a handful of blockbuster films, but Inside Out 2, phenomenal. Deadpool and Wolverine, really, really impressive. And then Moana, and then they have a Lion King sequel coming out in December. So really great turnaround, and then hopefully that momentum can continue next year.
Much of this are sequels.
Yes.
Is that just the vibe? I know Wicked was kind of different, but certainly tried and tested on Broadway.
Right. I mean, there's so much content out there. You got to understand. The studios are leaning onto established IP, right? Something that's had success in the past. So whether it's a brand or some sort of a sequel, as you said, yes, you're going to see a lot of that. They're trying to balance it out with originals here and there. I mean, Amazon just had an original film called Red 1 that came out. So you are seeing a little bit of back and forth, but I do think Disney especially has said that they're going to lean into some of their established franchises.
Interesting that Red 1 then also went to the theatres as well, having originally not been planned to. Bloomberg Intelligence analyst Kevin Neer. It's a great read, and it's a fun one ahead of the holidays. Meanwhile, we want to keep an eye on what's happening as we hurtle towards a long weekend. NASDAQ 100 currently off by 1.3%. We're currently seeing tugged lower by the likes of Nvidia and some of the key tech names where we're seeing a bit of profit taking. Not so for Bitcoin. We're back up at 95,000, but Dell and CrowdStrike, some of those earnings coming out and really putting paid to any optimism around a PC recovery, particularly for Dell and HP. We've got so much more to digest, but that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. Go have wonderful Thanksgiving days. We're having the day off tomorrow, but tune in to Bloomberg on Friday. This is Bloomberg Technology.